GM. So today I've got an absolutely alpha-packed video for you all. It's going to give you a full understanding of what's going on in the markets, the key trading levels to look at, what to expect with the upcoming data we're going to be seeing, the options expiries that we're going to be seeing, and my key trading setups that I'm looking at. So if you've not subscribed to the channel already, go smash that button, turn the bell on so you get notified for my videos. If you've not liked and comment on the video, go do that now. Help me push my content out to more traders that I can save more and more of you from the deep, dark depths of crypto YouTube, where only a few of us are actually real traders. So, done. Let's get into the video. Looking at Bitcoin here, what have we seen? Well, we had this weekly market structure break that I've been highlighting. That was confirmed at the beginning of November over here. So, I've showed you guys these previous examples of weekly market structure breaks over here. You have this example where you break it on this candle, and then you have that lower high bounce, that exit bounce, and you have this example where you break through it on this candle, and there's no lower high bounce until you reach 42K and get your bounce over here. So sometimes you have that nice bounce, sometimes you just nuke straight through. What are we going to see this time? Well, so far it's been straight down. So what are the signs that this downwards move is actually going to end and there is going to be some sort of bounce? Or what are the signs that it's not going to end and we are just going to tear straight through? Well, let's look at some of the data. What have we been seeing? Well, ETF flows have been absolutely relentless to the outflow side. Since the 30th of October, it's been an average of 250 to 260 million of outflows per day. Sailor was buying last week at an average of 102K Bitcoin. 850 million he bought, but that just gets absolutely offset by these daily outflows, and you've seen the market not respecting it at all. It's one sign of super heavy selling that we're seeing in the markets right now. Now on the high time frame, ETFs, they've actually catalyzed all of this rally on Bitcoin since they launched over here. So it's perfectly normal to understand that if ETFs were the main catalyst behind Bitcoin going to 126K, the institutionalization of Bitcoin, then if some of them are going to take profits, that can also catalyze the move down, and quite a violent move down. Where every buyer, there's a seller. ETFs are also allowed to buy Bitcoin at a price and sell it higher at a profit. That's the whole game, guys. So what they're doing right now is selling. It's as simple as that. You have to call the market for what it is. So high time frame, how can we look at that? Well, if you look at the Yubit chart, it shows the best picture really for the ETFs. So ETFs launched, price has been pretty much up only since the launch. And all you're looking for on a high time frame perspective is for this chart to form some sort of high low. Whether it's here, who knows? Doesn't really matter. Point is, as long as this chart doesn't go to new lows and doesn't therefore show that huge sign of weakness, that it was a failure and a net negative for Bitcoin, high time frame, this is just short-term selling, and we can make that high time frame higher low, which shows adoption. It shows ETFs on net are positive for Bitcoin and drive the demand, drive the price up, because Bitcoin's a heavily demand-driven asset, because we know the supply is capped, it's limited. The halvings get less and less relevant every 4 years. So the only thing we have to look at on Bitcoin, it's such a unique asset, is the demand side. And ETFs is one of those demand side. And at the moment, they're selling. So that lack of demand is leading to price going down. But they've been pretty up only. They're allowed to take some profits. It's just, where does this selling then end? That's going to be the question. Where do they start buying again? And is it a higher low on those higher time frames? If so, Bitcoin continues on that global high time frame adoption path, which is all good. You just have to have patience. That's actually what's going to give you your best opportunities, right? So that's what you're seeing on Bitcoin in terms of ETFs. They're selling very hard. Now, another thing you're seeing is since the October 10th liquidation day over here, which was the clearest sign that this was distribution, guys, this huge volatility, we've seen positions got initially nuked on that day, and open interest, so the futures market longs and shorts, building, 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 building while price goes down. So what does this mean? Well, since October the 10th, someone blew up, someone big blew up, maybe a market maker, who knows? But point is, that took so much liquidity out of the system. And bear markets, bearish phases, they're catalyzed by a lack of liquidity. There's that lack of willing passive bid in the market. And market makers, a lot of people, they FUD them and say they control everything. And, a lot of that is cope for your bags going down, because no one praises them when the markets go up and no one calls it manipulation then. But point is, they're the ones who take the other side of your trade. When the market's going down right now, they're the ones providing liquidity for people to be able to actually buy Bitcoin. But they're not able to provide as much liquidity since this day, since this nukage. And as I mentioned, if Bitcoin goes below this October 10th liquidation day, that's a big sign that it's not a bullish liquidation. It's not one that leads to a quick dip and rise. This was one that took out all of retail. And if retail are gone, well, smart money have no one to dump on. So they're not going to bid up the price. Instead, they're going to let price fall to an area where they can start reaccumulating again, so that they can mark it up and get retail interested right at the top, as usual, and then dump on them again. Rinse and repeat, rinse and repeat. That's the game. So right now, market's shown its hand. It's below that wick. It was a bearish liquidation. Markets have a lack of liquidity right now. They need to find liquidity. ETFs are selling hard. Sailor buying isn't pushing price up. You've got all the signs that there is heavy selling. Shorts have been right constantly, and it's a rare phenomenon, something that I've been mentioning to you guys in the Discord, where I've noticed there's some big players selling here. It's just as clear as day. And we know long-term holders are selling. We know that is present, but you can see it on the low time frames because the shorts are just constantly right, and all the trend bands on the short side on the low time frame are being respected. Bulls can't even muster up a squeeze, and well, the open interest tells the story, because shorts have been building, and they've been right. They've been making new lows, new lows, new lows. So all of this open interest, people are talking about, oh, everyone's shorting, there's going to be a huge squeeze, and I'm sure there will be at some point, but at the moment, they're right when it keeps making new lows. Until you can start reclaiming the yearly open, reclaiming the weekly open, reclaiming those price action levels, and ideally see some sort of proper capitulation. Before then, you've got to expect shorts to continue being right if they have been. It's simple pattern recognition. And seeing perp CBD just go down only, spot CBD down only. Heavy selling, and that selling is currently right until price actually shows some sign of reversing. And the biggest thing I want to see is forced selling, guys. We haven't got that yet. You haven't seen that wiping open interest, that big wick, that big spike that you typically see around a local bottom or a bottom. You also see volume rise on those days because it's people getting liquidated, people getting forced out of their positions. And I want to show you this chart over here. So if we go to Bitcoin, look over here, this is the yearly VWAP. So the volume weighted average price. The blue line is the VWAP. The other lines are the standard deviations above and below it. So October 10th came right to the VWAP, held for a bit, and since then we broke through. So we broke 100K. That triggered a huge wave of sellers. Anyone betting on Bitcoin to hold 100K had to unwind their longs because they're offside. We lost the VWAP, lost the yearly open, lost the 50-week. All of these high time frame indicators lead to positions having to unwind, because if you're wrong, you have to exit. It's as simple as that. And if you don't exit, well, that's what's known as the guys who are going to be in distress and going to trigger the forced selling, which typically comes around that local bottom. So what have we seen? We've hit the 1 SD of this yearly VWAP, bouncing so far there. But let's look at previous examples. So 2024 VWAP, we hit the 1 SD. That was the Pico bottom. 2023 VWAP, we hit the 1 SD. Again, that was the Pico bottom. But in this example, I don't see the same conditions for a Pico bottom, because this was forced selling. Why? Because this was when Silicon Valley Bank collapsed. This was when USDC depegged from $1. That bearish event is what triggered longs, Bitcoin holders, to exit positions forcibly through liquidations, through margin calls, where they are forced out of the market. That's a distressed holder, and it's like anything in the world. You have literal institutions who buy people's debt at a discount when they're distressed because they have economies of scale, so they can have more power in their negotiations with the creditors. And overall, they get that discount because they think they can get a good return on it. And it's the same with Bitcoin, same with any asset. You get these periods where sellers are forced to exit. Price, the same way it goes higher than it should, it also goes lower than it should. That's what gives us the most opportunity in markets. When those sellers are forced out, that offers your distressed holders, your distressed longs, and you buy them at that discounted price, typically offers great returns. But that comes with those bearish events because the dumbest money are forced out of their bags because they sell on the latest news that they've heard because they have no strategy. And it's the news that liquidates them. This was the Japanese yen carry trade fears when that was all unwinding. Marked the bottom, but again, that was a bearish catalyst. People were forced out the markets thinking it was going to go lower, got margin called. They had a huge bearish news event. Everyone was calling for a recession. Peak or bottom. So what's the difference this time? Well, we've hit that same band, which can provide a short-term bounce, but I don't think it's the bottom because there's been no bearish catalyst. There's no event that's forced sellers out at the moment. It's just these waves of selling when we're losing 100k, losing yearly open, using these key levels. It's not been some sort of news event that's actually got the dumb money, the distressed holders out of their positions. And that will come. There's always some sort of capitulation where you do get that high volume spike, like this over here. As I mentioned, if you look at something like volume, look at that. High volume spike at the low. This is people getting forced out the market. That's why the volume is literally almost triple the recent volume around it. And I'm sure it's similar here. Yep. Even this small candle, seemingly small at the time, although it was a move from 20k all the way down to 19.5, so percentage wise a decent move. That volume was way above the recent averages, almost double the recent averages, so it's again forced selling out of the market. You've just not seen that so far. If we look at the volume now in this current move, it's actually been declining and it's actually a lot lower. So I think there's a lot of reason for this to continue going lower. And one of the reasons markets have been drifting lower is because the government's been shut down. And we've got economic events coming up. And people don't know what to think. It's as simple as that. People don't know what the economy's like in the US, the state of it, because we've had no data for weeks now. And data is coming. On Thursday, we've got a bunch of jobs data, which is going to be interesting. And the thing is, this jobs data could be bullish, could be bearish, who knows? Problem is, because we've not had data for so long, there's uncertainty around it. People don't know what to expect. And risk assets, they rise when the market gives certainty, when the economy is slowly growing, inflation steady, job market steady, when things are quiet. They grind higher, up and up and up. But those same risk assets, when there's uncertainty, what are you going to do? Potentially, you're going to sell your assets because you're not sure what's going to happen. And at the very least, you're not going to buy more. So even if you're not selling, markets simply drift lower because there's less demand, and that creates the supply-demand imbalance, which is what moves markets fundamentally, supply and demand. So if there's a lack of demand, it will drift lower, and you've got big jobs data. Next week, you've got prelim GDP. If this wants to load. Anyway, you guys get the point. It thinks I'm a robot. Maybe I am. But you've got prelim GDP next week, and you've got core PCE next week. So a bunch of data is coming up, which markets are looking to and can be headline risk, can be a catalyst either way. Maybe short squeeze, maybe that final capitulation. So you're just getting this daily squeeze lower. So I'll be looking at that data next week to provide some sort of opportunity, some volatility. And overall, what I'm really looking at is also the stock market. So I mentioned this on the weekly outlook video. I talked about how I sold top of the bull market, pinned in the comments right now. Make sure to check that out if you haven't. But what you're seeing here is Bitcoin typically breaks down from its consolidations, distributions a few days to a week before the stock market breaks down. Red line when stocks break down, orange line when Bitcoin breaks down. And when Bitcoin then reaccumulates and breaks out, it also, by the same nature, breaks out first. Then stocks break out after. So far, you've seen Bitcoin break down, but you haven't seen yet stocks break down. You haven't also seen gold break down, which is another interesting thing. You've seen Bitcoin topped out on October the 6th. Gold topped out on October 17th. And stocks, well, they've topped out on October the 29th. So Bitcoin first, then gold, then stocks. Bitcoin's the only one that's actually broken down now. Gold, yes, they've topped out, but still haven't broken down from this double top pattern. It would have to break this box over here. Stocks would have to break this box. So what are we seeing here? What happens if stocks break down is the big question. Is that what then triggers the forced selling on Bitcoin? Is there going to be some sort of catalyst to send the stock market lower? Is that going to be GDP next week or the jobs data on Thursday? I think that's what a lot of traders are thinking about and worried about. Whether it happens or not is another question, but while that uncertainty is there, these markets drift lower. And if we do get that breakdown, as I mentioned, looking for stocks to go lower, break down like that, and then because Bitcoin's already broken down and we know it bottoms out quicker than stocks, as you see over here, stocks have another leg lower while Bitcoin has already bottomed out. What you then could see is Bitcoin go another leg lower, but then Bitcoin start to slowly bottom out while stocks are actually having another leg lower over here. And it's going to be that signal that tells you that crypto is the asset to now start looking at on the long side, because everyone always fades crypto right when it's about to have its best moves, have its outperformance. Because yes, Bitcoin, it is underperforming the stock market. This is Bitcoin against the NASDAQ. It's topped out and it's been going ruthlessly down ever since. And you've got some key levels. So if you look at April the 7th, so this was when all of the tariff craze was going on. This was the bottom for Bitcoin at 75K. We're now below that level. So Bitcoin, since the tariff crash, if you've just bought and hold since that day, let's say, has underperformed the stock market. Interesting. Wonder why that is. Is there something coming ahead liquidity-wise that's potentially bearish? And when you look at Bitcoin Gold, it's the same story. So April the 7th, Bitcoin bottomed, and so did this chart. It also bottomed. That's why it's a very interesting chart. But since then, it's gone lower. Gold's outperformed. But it's this underperformance now where you're looking at, okay, where can this now actually bottom out? Because we've seen underperformance for a long time. It's going to end soon. And the underperformance is what gives you your best opportunity for your buys. So I'm looking at some of these support levels over here, which previously been a support resistance level on Bitcoin against gold. Could coming to there be that absolute capitulation needed on crypto where everyone becomes a gold trader, becomes a stock trader right when crypto is about to outperform? Absolute classic. It's one-on-one trading, guys. When something becomes overcrowded and consensus, the opposite happens, otherwise known as path of least resistance or max pain, whatever you want to call it. And same with Bitcoin against stocks. So could this come to 3255 around this level, which previous resistance, previous support, then can that be the area where it's the time to actually look at crypto? And that will, of course, be seen with something like this. If stocks break down and you see Bitcoin then hold up a little bit better, and that's going to set up your big swing longs, if not maybe your high time frame buys. Who knows? That's what I'm very interested in, and that's what I'm looking at the moment when it comes to Bitcoin, because it's going to be some areas here in the 80s where I'm going to do some high time frame buying. Maybe we go to the 70s, maybe we go to the 60s, but I want to get some of this cash that I've offloaded. You guys know, sold at 121K on August the 11th. I want to get some of that cash now into the markets because it's been a huge short essentially with this hedge being 100% cash. It's time to now capitalize on that by buying back at cheaper prices. That's how you realize that gain almost. Even though it's not an exact short because it's not a hedge, it's going into cash, it's still the same concept. So in the Discord, I'll update you guys on every high time frame buy I do. You can drop me a Telegram if you're not in it. I'll be in the description. But looking at this 100-week EMA to definitely look at doing some of my first buying around that general area. We'll keep you guys posted because I think we're getting to the stage where we're close to that forced selling part, and especially if there's some bearish news, some bearish catalyst that triggers the forced selling, triggers us to keep going lower into this VWAP, and something more like 2022 where you actually have spikes lower into the lower VWAP level, potentially that's what's going to be interesting, because this liquidation event is much more like this. It's much more like this bearish one where you go lower and then you go to the lowest VWAP band before bouncing. You have some consolidation, lots of short squeezes, and then eventually you drift lower and lower. It's not like this liquidation where we went sideways and we just rebuilt. We never actually made a new low. So you got to call the charts for what they are, and what you're seeing here. Could we potentially need to slowly drift down to this lower VWAP level? That's what I'm going to be looking at in terms of high time frame buying. Now, onto the low time frames. What are we seeing? Well, Bitcoin has some key levels here. Obviously, you've started to fill in this daily gap from a while back on this tariff rally over here. And we've almost fully filled in this gap. I think fully filling it in is going to offer some sort of opportunities that maybe could be of interest. Again, especially if you see positions wipe, volume rise, force selling, some sort of bearish catalyst. That's going to be the biggest sign of a bottom for swing longs, is that news event failure. When you get at bearish news and price fails to go lower and then starts rebuilding, that's the sign that you need for an extended short squeeze and extended rally. Otherwise, it's all, again, low time frame stuff. What are we seeing? Well, you're seeing it was on the 15-minute. This dump overnight was holding 12 and 21 EMA bands. Daily open, we lost it, retested it as resistance, and that sold off, as I mentioned in the Discord. That led to new lows, of course. Sellers are in control. We're now trying to rally up. Bands have gone green. So look at your higher bands. Is the 1 hour going to be respected? Or if not, if we're going to see a squeeze today, you're going to get above that daily open first. And I think if you do get above the daily open, then you've got some gaps over here to 93K, which can definitely provide that move to just squeeze out some of the late shorts, and maybe we reject there, maybe we get to the yearly open. Be looking for those signs that longs are getting too excited if we do reach some of these levels, but that's the low time frame. If I'm looking at high time frame, again, you've got your high risk reward areas to look for longs and high risk reward areas to look for shorts. Yearly open, as I mentioned in yesterday's video, is not an area to do business outside of low time frame longs and shorts, because it's mid-range and everyone's bidding it, everyone's looking at it on Twitter. It's too consensus. That's why you flush below it, you can go above it, flush lower below it. That's what's going to offer the real max pain, in my opinion, because then you're getting people flip-flopping, not knowing what to do, not knowing whether bull market's back on or if it's off. And overall, I think if we start to fill in this daily gap over here, and we can already see we have started to fill in it, but if we fully fill it in, there can be longs in the high 80s, so 87 to 88.5K, which can offer some good risk to reward, I think. I'll let you guys know, of course, if I do take this setup, but this is what I'd be looking at. If we can get that further capitulation, there's bearish news. I see open interest wipe, so positions forced to close upon filling this gap. I think that can offer a nice swing long, even if it's just targeting the mid-range or targeting some of these beginnings of the gaps over here. That's what I'm going to be most interested in. The lower you go, the more interesting it is as a buyer, even on the swing long side, so on futures, as well as spot buyers, as I mentioned. And that's what Bitcoin's going to do, because who wants to step in the way right now? Not me, not really anyone, when you have these signs of the market just going down only and liquidity getting drawn out of the system. So that's what I'll be looking at. Also, some interesting levels are these Yubit levels. So we do have an options expiry coming this week. It's going to be on Friday. We take a look over here. So you got Yubit options expiry. The big levels are 52, 51, and 50. This is going to expire on Friday. So looking at these levels, you guys will know, if you've been following me for a little bit, how these options levels work. So if we break below 52, that can lead to a quick move to 51, which is more of an interim level. 50 is the main level with the most open interest. So while 52, while price is here, that can hold because people don't want those puts to be in profit. But once the puts get in profit and we do start getting below 52, that can catalyze a move to the next level, as everyone who's hedging against the puts has to unwind as you come into that expiry. And below here can lead to 51, and below 51 can lead to 50. And I'd expect 50 to hold then. as that magnet level, and that fills in this gap over here on the Yubit chart. So would watch these levels very carefully as we're coming in. You're going to see different dynamics this week as we get closer and closer to the expiries. That's how these markets work. And the week after that, then we've got the Deribit options expiry. So on Deribit, you're going to be a lot more familiar with this, of course, because it's not those Yubit charts. That's the ETF charts for anyone who doesn't know. On Deribit, you've got key levels at 90k. That's where there's 719 million of notional value in open interest, and you've got 80k where there's 655 million, and interim you've got 85k with 368. So these are the key levels. We're between 90 and 80 if we do fall below 90, which we have briefly done, but so far we're holding 90, which makes sense because you've got a bunch of puts there who are in the money if we go below 90. So as we get closer to next week, this becomes more and more interesting, where 90 is holding right now. But if we fall below 90, those guys get in profit. And they want to stay in profit. So they're going to be incentivized to push this price below 90 by next week, Friday, 8 a.m. Friday. That's when it expires, UTC. And if we do get below 90, then the next magnet, the next level that we're likely to fall to is 85. And if 85 can hold going into Friday next week, and you're seeing that this was just a move to push price below 90, then you're going to have to see all the people who pushed it with their shorts have to unwind quickly, and that can set up your best short squeezes. So I think patience is the play. You guys will know I took a setup like this a couple months ago that played out absolutely beautifully around Friday 8 a.m. Some key dynamics around options that have a lot of edge if you know what you're doing. Of course, if you don't know options, you don't need to trade this stuff. I'm just telling you guys what I do. That's what I do in recording these videos. It's my analysis, my setups, what I'm doing. If we lose 85, then 80, I think, is the rock solid level that does hold. So if we are so blessed with volatility that takes us to 80 coming up to next week, Friday, then I'd definitely be looking for a short squeeze. But if that can only push us to 85, then again, I'd be looking for a short squeeze after next week, Friday, if we are seeing that signs that people were just pushing it down for that OPEX, and those positions then unwind, and that can lead to that rally. So that's what I'm looking at. That coincides with what I mentioned here around maybe filling in this gap in the coming days to weeks. That then triggers a short squeeze. Do we see four sellers? Is there a bearish catalyst that then fails to go lower? All of these signs set up your high probability swing longs. They set up your best moves, your best trades. So patience is required. Unless you're trading on the 15-minute, 1 hour, which we have been. High time frame, I'm looking out for those signs, and I'll wait for them to come very patiently and execute my setups as they come. So that's the market. That's a big deep dive on Bitcoin. No point looking at all coins, all of that. Bitcoin's the king right now. It's got the most liquidity to trade. So that's the focus. Hope you guys enjoyed this one. I'll see you guys in tomorrow's morning markets. GM.